Well, welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We should have fireworks going off because it is time to partay. Having said that, it's all because some good things are happening right now for our cattle producers. And we're going to go in depth about what is going on with this trade, especially when you look at passing on some bids, consumers not crossing the protein aisles, and add to it some sale barn movement that's got an interesting spin to it. So we're going to get all those details coming from Brad Kooima as he joins us with Kooima Kooima Varilek out of Sioux Center, Iowa. And it is. You made the statement to me before we started this program. It's our time. And it really is right now for these cattle producers. Let's kind of talk about what's going on.
Well, Susan, thanks for having me on. Thanks for the hype too. I feel like, getting out there and like starting something, right?
There you go. There you go.
Yeah. Well, yeah, it's our time. So I was doing a meeting last week one day with a bunch of great cattle people up here in Northwest Iowa. And, people were talking about, so what about, the packer not having any margin and blah, blah, blah. And just a gentle reminder what happened 3 years ago. Okay. We were just starting to get the waxing that we got with the COVID deal, the packer giving you 95 cents for cattle. And that was only because one packer was willing to do it while they ran the boxes up to 475. I mean, seriously. So, as we get, and I guess you could say it was their turn, and boy, did they take advantage of it. The now that we've gotten this leverage back to where we got a tighter supply of cattle, we still got outstanding demand. It's our turn. They're going to lose their margin. We'll see. The retailer is going to hang tough, trying to hang on as long as he can, Susan. Look what that hog retailer is doing. It's ridiculous what they're doing. But I think it's our turn to get our share, more than our share, for a little while here of what in terms of what the feedlot ought to get. You mentioned demand, and that people are asking me that all the time, and honestly, there's no way to know. Demand is a perception, right? If you measure where we're at, we don't throw beef away. We don't throw it away. It's not corn. You can't store it in a bin. It's a perishable commodity. So how much are you raising? How much are you producing? And then how high can you sell it? We had a monster beef production year last year, killed more cows on top of it than we'd ever had before. And yet we flew through the meat supply, right? So now as we tighten this thing down a little bit, this is what should happen. We should take the market, the roof off the market. So, yeah, I was wondering if we were going to have a quiet lack of trade week maybe this week in terms of the cash, because it is a short week. It felt like that yesterday, didn't feel like that today. So some of these cash market bids started to pick up a little bit, particularly in the South.
Well, it kind of is building up momentum in the fact that markets are closed on Friday for Good Friday. Having said that, are we going to see this momentum continue into the Thursday trade?
Well, at the risk of sounding like a smart aleck, I would say, had a couple of interns here this semester, and I was talking to them, and when you get a trendy market, often the market will close in the direction of that trend at the end of the week. And I think that's a function of relating to who's ahead or who's behind. So if your position is worked all week, are you worried on a Friday or on a Thursday ahead of a long weekend? Not a bit. You wish they were open on Saturdays and Sundays, right? Now if you're behind, yeah, maybe not, right? If you're behind, that's usually where you see that. So, last Friday when it was month end and quarter end, I thought, well, we'll probably have a tough day, and we didn't on the cattle. I would expect that it's the shorts that are on the run and not the longs. I think the longs are very relaxed, and why would they be? Markets within a little bit of what the contract high has been.
So what's going on in these sale barns right now?
Well, today at the one closest to us here, the Worthing delivery point, we saw conventional cattle bringing 174 to 175. Not very many of them. If you turned on your computer late, they were done early, which is also very reflective of the supply in this part of the world. Our show lists here are the tightest they've been in 3 years. We are literally in that big gap between yearlings and calves. And I talked about this on your show for a couple of weeks because of the weather. These calves are not even close. Calves that are always ready in April, I'm not sure. The ones that I have, I'm not sure if they'll make May. because of the brutal winter that we've had here. So they're going to have to export cattle from the south to the north. You're seeing some of that already. Cattle moving out of Kansas into Nebraska to get slaughtered there. Very positive situation. It's very normal, a characteristic of a bull market when the north is a premium to the south, because our numbers are not static like the south is. Our numbers are governed by seasonality because of when we calve. It just is what it is. Down there, they can calve year round. So, when we change our supply here, it has an impact on the market from Texas all the way to Iowa.
Earlier in the week, we were talking with Joe, one of your coworkers there, that people aren't crossing the aisle. I mean, even with the world that we're in, the banking uncertainty that's in there, interest rate uncertainty, they're still holding very strong to their support of the beef industry and not looking for cheaper proteins really at this point.
Yeah, it's a great question, and we've talked about it here, trying to take a deep dive into the why of that. Joe, one of my partners, his family is a traditional generational hog family, and they still do it. Actually, they're independent hog producers. You can't hardly find one around here anymore. So you kid them a little bit and say, well, because they bred all the flavor out of it. They made a poor marketing move, and they decided that they should advertise themselves as the other white meat. But I don't know that that's the only thing. I think that what's happened, one of the what's the right word I want here? One of the paradigms or whatever, one of the constants that we'd seen before COVID was this relationship of how much beef do you sell at an H&R hotel restaurant business and how much you sell retail through your Hy-Vee, Fairway, whatever. Okay, Costco, Walmart, and that percentage, some people estimate, may have changed 10 to 12% during COVID. In other words, we regained a whole bunch of the retail business, where people watched a YouTube video, I suppose, learned how to cook a steak outside on a grill, and found out that it was actually pretty good. In fact, maybe it was better than what they could buy at a restaurant, and they could probably do it twice a week for what it cost them to do it, to go out. So I think that shift has had some long lasting effects for beef demand. And not to be callous about the situation, but it seems like there's also a segment of our population where this upper middle class thing has distanced itself again, right? I mean, it's not right, but it is what it is, where you've got a group of people, I think, who are at an economic level that they say, yeah, I'm going to have a ribeye. I don't care what it costs. Maybe I'm being a little exaggerated for effect, but I do think there's a bit of that too. So I don't know. We've got a product that the consumer loves. It's very flavorable. Flavor tastes good, right? And you also got this foreign demand where people are discovering beef out there in some of these, like China, for instance, that they really never had a toehold before. So demand is good.
Demand is good. We'll keep it up. And now we're talking 70s and 80s here next week, which means a lot of grills should be dusted off if they haven't already been done. So
roll out the grills. Yeah, north, it's not so much. I got some good friends in cow-calf country. They just got blitzed again here in the last 24 hours. And we'll find out here in a few days just what kind of a death loss situation they've got. But tough time up there. I feel for them. I wish them the best. They're supposed to be 70 degrees too. So it's going to go from snow to mud in a real big hurry up there too.
Never a dull moment in the cattle industry, is there?
No, ma'am.
All right. Well, we wish you and your family a very blessed Easter, and we will catch up with you next week.
You and yours as well. Thank you.
Thank you. Brad Kooima has been joining us for this week's Cattle Call, and as we always remind you, commodity futures and options involve a substantial risk of loss not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.